Good morning, Campbell McCrary here, Amvest Capital in New York. Welcome to the Amvest Capital Inc. live webinar with Pancon Resources Corp, or Pancon. Pancon trades on the venture as PUC, Papa Utah Charlie, and on the OTC QB as PUCCF. We hope you'll enjoy today's program. It will be available in replay mode about an hour after we wrap up. And if you don't see our email on that, just go to amvestcapital.com/webinars and it'll be up there. Amvest, of course, is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. And as I always ask, please send in your questions in the question pane of the GoToWebinar control panel, and we'll ask them in real time. Anything that's on your mind, we'd love to broach with Leighton. Very important, this call is most definitely for informational purposes only. Please read this disclaimer. Presenting today, Leighton Croft, President and CEO of Pancon, based in Charlotte, North Carolina, and an hour from Brewer, their flagship asset. He's got more than 15 years of global mining experience in senior roles with Ivanhoe, Rio Tinto, Peabody Energy, Airdine Resource Development, and he's been the president of Pancon since 2017. And again, please send in your questions, and we'll ask Leighton. So, Leighton, you have the floor, 15, 20 minutes, whatever you need. And I understand you had some great news. So tell us what's going on. And
yes, sir.
Yeah, there we are.
Thanks, Campbell. Can you see me?
I see you, and now I see your presentation. All good.
Excellent. Okay, well, I want to thank Amvest Capital. I want to thank Campbell and Stewart for putting together today's webinar. It's a beautiful day here in Charlotte, North Carolina. I'm in my home office, about an hour and 15 minutes drive from the Brewer Gold and Copper Project. Last time we had a webinar, I think we were talking about the Brewer Gold Project. Well, this morning we put out some really exciting news. The headline of our news release this morning is Pancon reports significant copper in discovery holes 4 and 5. So today we're going to go through some slides. We will have a Q&A, and I want to say that the news release I just made reference to is on our website, and we have an updated corporate presentation. The slides, some of the slides you'll see today from that is also on our website. So on the front slide here, you can see kind of the overarching headline, our maiden drill program. You know, we've reported now on gold and multi-element geochemistry from 5 of the 7 diamond drill holes from phase 1. Our programs proved significant gold copper mineralization below the former Brewer gold mine. So I will just go ahead. Today, I think 3 key messages are in order. Number 1, the copper is real. Value, this is a value story as we continue to grow and get more information. You know, exploration really is an iterative process, and you build a story over time based on data, based on analysis, and based on decisions that you make with the scarce resources that we have to do drilling and other exploration methods. Message number 2, Pancon is onto something big. This is not just a value story, this is a growth story. You know, in these kinds of exploration stories where you've got a brownfields project, a former mine, a lot of prospectivity, a big gold mine down the road at Hale, size is important. And you want to get a sense of what kind of size potential you have. Well, with every new release of information like this morning, we're starting to get a good picture, and the growth potential is big. Message number 3, phase 2 is underway. So we've got momentum, we've optimized our processes for drilling and sampling and laboratory turnaround times. So value, growth, and momentum, those are the messages today. Now, the information on this slide is all contained in the news release that's out this morning, and like I said, on our website. And I just want to highlight a couple of the subpoints on each one. So in terms of the copper is real, you know, we have thought all along in the 1970s, the U.S. Geological Survey recognized Brewer as a porphyry system, or as having porphyry potential, meaning there's a big porphyry copper heat engine deep below, But we also know the previous operator that mined 178,000 ounces of oxide gold in the 80s and 90s, they encountered sulfide mineralization with gold and copper. We know from those historic assays. So we've always suspected there's copper, but this is really the first time. It's a real milestone where we've been able to say, look, there is copper here. It's less than 200 meters below surface. We have two very interesting 7.6 meter intercepts of almost 1% copper in holes 4 and 5. They're 110 meters apart on the north-south axis. And this suggests a potential copper-rich horizon just under 200 meters below surface, right under the old mine. And there's a potential for real continuity here. We're going to need to further test that, which we're doing right now. But that's really exciting. These are not sort of peripheral, ancillary, anecdotal copper values. These are really compelling. But when we look at the gold and the copper, how it correlates to the gold, and not just looking at the highest copper concentration values, which are those two intersections I just mentioned, we're also seeing something very exciting. And I'm going to get to a figure in a minute where you can just see in visual representation, but on a gold equivalent basis, where we take certain assumptions and we basically calculate with a formula the gold plus the copper to get a gold equivalent, you're really seeing a real boost in all of the gold values that we reported from holes 2, 4, and 5, particularly 4 and 5, we reported on March the 2nd. So here you can see in hole 4, there's now about a little more than 115 meters of 1.2 grams a ton gold equivalent, and in hole 5, 181.6 meters of almost 1.7 grams per ton gold equivalent. That's like a 22-story building. I mean, so this is real. The gold is increasing with that equivalency. And down here, I talked about correlation, but when we talk about size, we also want to recognize that there is gold everywhere. There's anomalous gold everywhere. Last fall, we reported on 90 shallow rotary air blast RAB drill holes, about 18 meters each, all over Brewer. And more than 90% of those had detectable gold. Well, today we're reporting on all the results, gold and multi-element geochemistry, for the first 5 of 7 diamond drill holes. And 86% of all those samples, 1,339 samples, have detectable gold with a cutoff grade of 0.025 grams per ton gold. So again, holes 1 through 3 aren't as spectacular from a gold basis as holes 4 and 5, but gold is ubiquitous, it's abundant, and the continuity is a very important part of the growth story here. And again, momentum. On April the 1st, hopefully you saw, we put out a news release that talked about a model that we built. We were able to put together an input and model almost 48,000 data points of historic blast hole gold and copper assays from the previous mine. And we built a model. We talked about that in our April 1 news release, and it's in our corporate presentation. But that historic blast hole model has been very helpful in vectoring our upcoming drill holes for phase 2. The good news is on April the 6th, Cascade, our sonic drill partner from Aiken, South Carolina, mobilized, and yesterday they finished the 4th of 4 initial holes for phase 2. Now these are vertical sonic holes through the old pit, just like holes 4 and 5, testing new targets based on 4 and 5, but also being informed by that blast hole data model I'm talking about. Now, today, our diamond drill partner, Logan Drilling out of Sandersville, Georgia, is mobilizing. Tomorrow, the diamond drill starts turning on those same 4 holes. And the first 4 sonic holes were drilled very quickly and smoothly. And I think we're going to have a very optimized set of results coming through in phase 2. And we're using SGS Labs for phase 2 out of Ontario. So those are some key highlights. Some of these slides you've seen before. I'm not going to stay on these. This is an updated land map. We have picked up we just picked up a lease over here. We picked up a lease here. We've got about 1,600 acres under lease on the Jefferson Project. So that's still going. This is just a slide with some context. Again, I'm emphasizing that ubiquity, that continuity of anomalous gold in more than 86% of our diamond drill holes and more than 90% of our shallow RAB drill holes. So, but again, today, I think the focus is copper. And copper is in a great place right now at the macro level. I think closed yesterday at another high in terms of the recent cycle. But this slide here shows you the 7 drill holes from phase 1 and the 4 drill holes in the yellow right here. I don't know if you can see my cursor, but I'm pointing right here inside the old pit, below holes 4 and 5 to the south, to the southeast, and then a step out hole, if you will, to the southeast, right in the former B6 pit. The former mine had 3 pits, the main pit here, the B6 pit here, and the Northwest Trend pit here. And as I've said before, the main pit and the B6 pit were all reclaimed, about 6.8 million metric tons of backfill material. And we are expecting results from those 2 sonic holes on the top of holes 4 and 5. And that should give us an indication of what possible gold mineralization exists in that waste rock. So, you know, this is the table that's in our news release today. There's a lot of numbers on this page, but I'm going to focus on this far right column, the gold equivalent, which I've already mentioned. We did that calculation for both holes 4 and 5, but you can see these copper results for holes 4 and 5 look good on their own based on a correlation with the gold. So this is basically means we're only looking at the copper values based on these reported intercepts from March the 2nd, from the March 2 news releases when we reported this column. And so if you just look at those intercepts in terms of copper, this is what you're going to see. And then this is the gold equivalent for those same intercepts. I also want to make mention of holes 1, 2, and 3. We didn't see anything extraordinary in terms of copper, but you know, in hole 2, we saw almost 26 meters of 0.53 grams gold. In hole 1, almost 4 meters of 0.23 grams. In hole 3, 23.35 meters of 0.41 grams per ton gold. So again, holes 4 and 5 are really outstanding, but you're seeing a very strong continuity of gold around Brewer. This is a very useful image. This is a cross section looking west. You can see the former mine here, goes down 55 to 65 meters. This is hole 4 and this is hole 5. Gold values are represented by these colors with this legend here on the left side of the hole, and on the right side of the line is going to be copper. So again, we're presenting the same information I just talked about and showed in a table in a more graphic way, in a more visual presentation. But you can see here, again, how the copper is correlating to the gold very strongly. I mentioned earlier, if we just look at the copper concentrations on their own, not based on these previously reported gold intercepts or intersections, up here, sorry, in here and here, you'll see 2 7.6 meter intervals of almost 1% copper. So this is what's got us curious, right? I mean, that kind of suggests some continuity possibly. So that's what really phase 2 so far is focused on. It's building on the successes of holes 4 and 5 from phase 1. This figure here is also in today's news release. And this is another way to show in holes 4 and 5 how the gold and the copper correlates. It correlates quite well. Again, this is corroborating that the gold and the copper is probably part of the same mineralized system. This, as we've said, it's a high sulfidation epithermal system that possibly sits above a big copper porphyry engine. We've got some updated core photos from holes 4 and 5, and we've added, as you can see here in yellow font, the copper values. So this is hole 4, between 161 approximately and 167 meters, a couple of boxes here, and you can see the values. I need to put on my glasses, but you can see here 1.15 meters of 1.5 grams gold and 0.5% copper. Down here, just in the same box, you can see 1 meter of 6.5 grams gold and 1.17% copper. So that's very strong. Here, 4.81 grams per ton gold and 0.6% copper, and so on. In hole 5, you can see here 1.5 meters of 30 grams per ton gold and 0.35% copper, and so on. So again, we're really excited. This is what we thought might be the case, but now we know for sure. These are some slides of visible gold in hole 5. As we've said before, we had 5 sightings of visible gold in hole 5. Pretty unusual for a high sulfidation epithermal system like Brewer. And those were in 3 different locations in hole 5. So again, very encouraging. I've talked about this before, so I'm not going to stay on this too much, except to say that this Martini model more and more is something that we think is really valid. And today's news release and the results and the copper values that we're seeing and the continuity and the possible copper-rich horizon right there under the old mine, I think really do underscore and corroborate this model. Same with this slide. It's the same story. We just think that, you know, what we've been thinking and working towards is starting to really materialize. One of the things I mentioned in key message number 3 about momentum with phase 2 is, and in April 1 in that news release, hopefully you've seen, we talk about our historic blast hole data compilation, which I mentioned. Again, for the 3 pits, we had 48,000 data points of historic gold and copper assays. This image right here, the left and the right, is just looking at the main pit, which was the biggest pit in the former mine, and that had, I think, about 35,000 data points. So this image is not new. It's been in a previous news release and it's on our website. But I think it's increasingly important for us as we think about how we are targeting holes for phase 2. And so this is a cross section. This is our hole 4 and 5. These histograms only have the gold values, not the copper. But you can see here that it gives us some indication of possible controls on geometry and structure, and that's really the name of the game in a complex system like Brewer. You know, again, Brewer was created 550 million years ago, the same time as Hale, which is a 15-minute drive down the road. They're fraternal twins. They had the same parent, as I like to say. They're a little different. Brewer has copper, Hale doesn't. Hale is multi-million ounces. I think increasingly, you think about the part of the growth, the size part of our story, we're looking at something comparable to Hale. The next steps with phase 2, we've got, this is a plan view of that blast hole, historic blast hole model. And this again is the RAB, these yellow dots are the RAB holes, and the white is the phase 1 drill holes. The team is strong as ever. We're working very well together. Phase 1 was a great opportunity to optimize our processes. And I'm feeling very strong. This is the updated capital structure, corporate information slide. You can see not a lot has changed. We've got about 3 million Canadian dollars on hand. We are fully funded to finish at least 10,000 meters of drilling. We've only drilled 2,700 out of that 10,000. So we've got a long runway here with the cash on hand. As you can see here, again, we've got about 45% of our shares that are out in the hands of retail, and everyone else is either management, directors, institutions, or high net worth individuals. And I won't stay too much on these, but I'm going to highlight the fact that we've tried to keep our main presentation very tight and short with only 18 or 19 slides. And what we've done is we built a pretty robust appendix. So some of these slides used to be in the main presentation, they've moved back. Some of these slides in the appendix are actually new. So you'll see there's some more technical information for those of you interested in more technical aspects to our project with geological concepts, and this is a cross section that we use to help target some of our phase 1 drilling. This is another look of that 3D blast hole data model that I've been talking about, some additional data. We put out a video a few days ago focused on this one, slides 29 and 30. It is 28 and 29, but I added the key 3 messages at the top of today. So on the website, you'll see still 28 and 29, the Brewer option agreement, and our environmental partners, ERT. And then you'll see here, there's a history slide. There's a plan slide. We've added this slide for anyone interested, looking at metallurgy and recovery. And a really high quality technical report was produced in 1984 by Hazen. It's a little dated. We do plan some metallurgical testing to update it, but it's quite encouraging in terms of the recoverability that we think is possible here in terms of the sulfide material. So I'd encourage anyone interested in that topic to look at that slide. And then also, we've looked at some of the current copper projects and mines and their average copper grades. And this in no way is trying to compare what we've just reported this morning, but it's just a little bit of context, because we really haven't talked about copper in the context of Brewer or Pancon Resources until today, now that we have this very compelling, robust data set. But it is important to think about copper because I think that that's really going to increasingly be an integral part of this story, which first and foremost is being driven by the gold. But as we said, there's a lot of value and growth potential and momentum that we've got going for us right now. So I'm going to end on that first 3 key messages slide. And that's about 20 minutes in, and I'm going to pull up my screen here and see what questions I can answer. Campbell.
I'll just sort of start with the conceptual question, and we were kind of discussing before we got started. We've got the geological risk, and I asked, what are your thoughts if this comes up short, or what's the big picture? What are you shooting for? And then balance that with, I guess, what are the sort of corporate risks that, if you can sort of itemize them, that every company has, that that are keeping you up at night, so to speak, but are just and how you're handling navigating those items.
Great. Let me just ask a housekeeping question real quick. Can you see my screen?
Yes.
Or, okay. Thank you for that question, Campbell. Yeah, let's start with geology and geological risk. That's at the heart of any exploration program. Again, this is a former gold mine. The best place to find a new gold mine is at a former gold mine. This is the first area of the first gold rush in all of North America was here. And it ended not because the gold was depleted, it ended because of the gold rush out in California and Alaska and Yukon. The US Civil War had a key role into playing why lots of folks didn't come back, given how disruptive that was. So we're in a brilliant geologic endowment area. So I think, the geological risk, I think, is relatively low. Every new result that we're reporting on our drill program, our RAD program, our diamond drill program, is showing, it's proving the concept that there is gold and copper here. I do think we're at the top of upper zone of mineralization. I do think that there's a possible lower zone of mineralization. And again, our fraternal twin Hale just down the road has 4+ million ounces, I think. And so I think we have every potential to be in the same ballpark. So the geological risk is low, I think. The upside is very high. In terms of jurisdiction, very low risk. South Carolina is very mining friendly. Hale has been a great winner for the state of South Carolina. We have great relationships at the state level with the regulators and with the EPA. This is still controlled by the EPA at the federal level. And so I think regulatory risk is low. We have strong community support, excellent access to suppliers, labor, and excellent infrastructure. So I think if you were to look at what may be more risky is like any project like this, it's time. There's a clock that's ticking in our case. We have an option agreement. We have the exclusive right to explore Brewer and possibly to buy the property. But the option agreement goes through October 2023. I'm confident that given what we've done so far and how we're optimizing our overall processes, and I think we've got good momentum now with our exploration work, that risk is not very high. But at the end of the day, time is limited for projects, any project. But that would be kind of my answer to your question, Campbell.
There's just so many things that come at a junior. So,
yeah.
All right. When the assay results from holes 6 and 7 and the sonic holes 1 and 2 are expected to come?
Well, like I said, we've had difficulties. I've said this before. We put this in our April 1 news release. I think our March 2nd news release. We've had trouble with phase 1 in terms of turnaround times with labs. COVID has been a big problem, and we see now, at least in the US, things getting a lot smoother on that front. So it's, I can't say exactly when. I'm hoping sooner than later, and I do think it'll be weeks and not months until we get those results. But I just want to highlight something I kind of mentioned earlier in my presentation is the 2 sonic holes are interesting to us because they may give us an initial sense, since we understand that historically when that 7 million metric tons of waste and ore, the sulfide ore that wasn't able to be processed by the heap leach, was reclaimed into the pit. It was done in a rather careful, homogeneous way in terms of how it was engineered. That's our understanding from historic documents and reports and diagrams. So I think a few holes, depending on what the results are, might give us a sense of what a possible resource might be. And it's much quicker to monetize waste because it is waste. It's different than seeking traditional permits for mining. So there could be a quick pathway to cash flow depending on what those results are. So that's one thing. And then holes 6 and 7 are step out holes about 400 meters south and about 700 meters to the northwest from the former mine from phase 1.
Again, what are the main objectives of the ongoing phase 2 program?
It is to follow up on our amazing success with holes 4 and 5. As of today, we now see holes 4 and 5 in terms of gold and copper. And again, you see that nice boost with the gold equivalent values there. But look, with the blast hole data that I've talked about, that we've put out in a news release, we're really confident that there is more to be explored and discovered and proven in terms of continuity, in terms of size, and in terms of values or grade, if you will, underneath the old mine. So phase 2, as I've said, we've got 4 holes that are already done on the sonic, and the diamond starts tomorrow. This Friday, actually, we have our first shipment of samples. All the samples from those 4 sonic holes are going to be on a truck. They should be up at SGS Labs in Ontario early next week. So we're going to get a much, I think, more optimized sense of news flow pacing. But that's really the focus so far on phase 2. Now, we do anticipate phase 2 to include up to 8 to 10 total holes. We've only got 4 started right now, and we're going to see what those look like in terms of the core coming out of the bedrock below the mine in the coming days and weeks to help really hone in on where we want to drill the remaining holes in phase 2.
What method was the former mine using to recover the gold, and did they end up doing anything with the copper?
Right, so that's a great question. If you think of the mineralization as we now understand it at Brewer, you can kind of think of 2 types. There's the type that's near the surface that has been exposed and it's oxidized. And then there's the unoxidized material below it, which is sulfide rich. And this is a high sulfidation system. And so the previous operator was using cyanide heap leaching method, which is relatively quicker and cheaper. But by doing so, they were only focused on extracting the gold from the oxidized material, where there was not any copper. And when they got into the sulfide material, they unfortunately tried but failed to extract the gold and the copper. So we know there's copper there. We always have known that. Today, we've proven it more on our own terms with our own drill results. But that's the story. And that's a key part of why we're so bullish on this project, is because this was only seen historically. You know, there were more than 1,000 holes drilled. Most of them were like 100 feet deep because they were only going for that surface oxidized material. No one had ever targeted the sulfide material. So in that sense, this is like a greenfields project, but we have the benefits of a brownfield project because of all the work that's been done, the data that we have access to, the infrastructure and all that.
Do you think you have enough data to do a maiden 43-101 report? And then how much do you think you'll need to spend before you're ready to write one?
Not yet, but certainly that would be the plan. And we plan to drill, I said 10,000 meters. We're fully funded to drill 10,000 meters. I'd like to think that we're going to be in a position to drill a lot more than that. And I don't think that it's going to take that much time and that much money to move towards what could be an economic resource. And again, I want to underscore something. I see there being as 2 potential economic resources. One is in that former waste material in the backfill, which is right at surface, and you don't need as many permits because it's waste. And the other is right below it. And over time in the future, I think the blue sky to this story is perhaps a third value target or potential resource at depth, this big porphyry system I've talked about.
Could you monetize the waste and find some cash out of it and pay some bills? Or could you monetize the waste?
I would love to. I mean, we need to prove what's in the waste. And that's why those first 2 sonic holes and then now these new 4 sonic holes. But yeah, I mean, that would be fantastic.
Sort of short-term, easy production. Stu?
Yeah, thanks for the presentation, Leighton. So I guess following on from Campbell's question, do you have to go through the option agreement to have acquired the project before you could hypothetically process some of the backfill waste?
I think the answer is yes to that.
Yeah.
I will say though that we are beginning on May 11th. We're kicking off the dialogue and the negotiations with the government the federal and the state level with our partner ERT. And so we're going to be moving, towards a decision, but you got to have those talks and those negotiations on a track. But I do think that you're going to need to get real clarity and a definitive sense of ownership before, cash flows can start flowing. But I think there's a lot of prep work that can be done so that you can synchronize both the execution, let's say, of the option agreement, and meaning the acquiring of the asset in a formal sense, and then just right away, if you've done things in a good systematic planning fashion, get to monetizing that waste right away.
Yeah. And then what are the work commitments on the option agreement and that transaction?
Right. So we've got to spend $2 million to get the full 40 months. We're more than halfway there. I really have no doubt at all, especially given the cash we have on hand, that we're going to meet that commitment. And that's really it. We get approval of all the drill holes from DHEC, which is the state regulator. We have great relationship with them. 5 of them were at site last week and we spent some time together. So that's really it. We don't need special permits to do all of our exploration work. And the quality of our relationships allows for there to be really no delays or hiccups process-wise in terms of implementing our exploration plan.
Got it. And that's over a 3-year period, is it? Or
well, let's say the option agreement, assuming we meet the $2 million expenditure threshold, goes through the month of October of 2023. So, that's still 2.5 years away.
Yeah, right. And then who else in the Carolina Belt is exploring for base metals and precious besides yourself?
Well, increasingly, I think there's a lot of attention that's going to be paid here. And there's a whole bunch of lithium right outside of Charlotte where I live, Piedmont Lithium, Albemarle Corporation. There's a privately held company called Carolina Mining Company, which is owned by a strategic advisor to Pancon and a shareholder, Philip Courier. And they've got some exciting properties in North Carolina. Aston Bay Resources has exciting gold properties in Virginia. Of course, there's Oceana Gold with the Hale Gold Mine down the road. There's other companies that I know of as well. So it increasingly is an exciting place to be, and we think we've got the best asset of them all.
Yeah, great. And have you done much work on the adjacent project, Jefferson Gold, that Pancon originally owned before securing the Brewer project?
That's a great question. I'm just you can still see my screen, correct?
Yep, we can.
Okay, good. I'm just flipping down to a slide here that shows the blue is the Jefferson project and Brewer is the crosshatch is the 1,000 acres that constitutes the Brewer property. So in a legal sense, I guess, these are 2 separate projects because the option agreement with the receiver and effectively the government is just for Brewer. Jefferson is 100% owned by Pancon, but from an exploration, strategic, geological sense, it's just one nice, big, juicy project, right? It's 2,600 acres. And so, yeah, in the past few weeks between drilling of phase 1 and phase 2, we had our geologists out. They walked all of the land on both properties, if you will, or the entire footprint. And we've done a lot of very detailed mapping of all outcropping, and we've collected some surface samples. So when I mentioned in my presentation that this Friday we've got a truck load of sonic samples from these new phase 2-4 sonic holes going to the lab, we're also going to be sending some surface samples that we collected from that outcrop mapping. And once we get all of the data back from all of phase 1 and we've compiled it, and once we get some of these initial assays back that we're going to be sending up this Friday, that'll give us more information and more confidence in stepping out with some of our diamond drilling later on, perhaps in phase 2, if not in phase 3, onto the Jefferson project. And it's very prospective, everything around Brewer. So we're very excited about, the entire footprint.
Yeah, gotcha. And then I was going to say, what other exploration techniques are you using to assist with the drilling you're doing at the moment?
Right, so we did, and we put this in our April 1 news release, we did some follow-up geophysics, we did some downhole time domain electromagnetics and some surface. That was helpful. Again, historic data compilation and analysis, I consider an exploration technique, or at least it's a method. And that's proven very valuable to us with this blast hole data I've talked about a couple of times. We continue to do surface sampling and mapping. But again, our bread and butter, like any good exploration project, is drilling. And we have so far used 3 different types of drilling: RAB, sonic, and diamond. And we will continue probably using all 3 types of drilling.
Sorry, I was on mute. Thanks for that. I'll pass it on to Artie now.
Thank you. You mentioned on phase 1, you got some clues for the phase 2. You mentioned hole 4 and 5. I'm wondering what exactly made you excited. Are they the grade values, or interval lengths, or specific type of mineralization?
Thank you for that question. And the answer is basically all of the above. We're excited about the grades. We're excited about the thickness. We're excited about how long these intersections were, especially on the gold side as well as on the copper side. And if I can just go down to this histogram, this cross section. I mean, here you're seeing good grades or values, if you will. You're seeing very long intercepts. They're right under the old mine. These are the first 2 holes we've drilled under the old mine. And you're seeing not just gold, but gold and copper. I will say that in our multi-element geochemistry that we're getting back, and I've said this before, but we are seeing other critical minerals. We're seeing rare earth elements. It's too early, and we don't have enough data to say much more than that. But you know, look, Brewer is an absolute cornucopia of mineral wealth. There is so much there. You look at the periodic table and you see so many things at Brewer. There's a lot happening here. Obviously, our focus, we're very focused on the gold. The copper is increasingly a very compelling part of this story. But I think Brewer has so much more to offer, and we're going to be getting into that with the more drilling we do and the more data compilation and analysis that we conduct.
How big is this old pit? And I'm wondering if the material below become economic today, what would be the strip ratio? Do you think you will push back the pits a lot, or is it easily accessible?
Thank you for that question. I'm going to leave it on this slide right here. You can see A to A prime, that's about 550 meters. So this is just a cross section of the pit, but if you were to think of it sort of on a north, south, east, west dimension, think of it as sort of 400 meters by 500 meters. And in terms of depth, it goes between 55 and 65 meters approximately. As I've said before, this is full of waste and sulfide ore that was backfilled and reclaimed in a rather homogeneous way back in the mid 1990s. So if, again, we just talked about this a few minutes ago, if there is value here, if we believe there is, you know, I personally think that there's a potential there for there to be at least 50,000 ounces of gold. Now, you know, we don't know yet, but I think that if that were to be the case, for example, and we were to look at processing options, this has already been blasted, so there's not much crushing required. And I think that, you know, you could monetize that, create some quick cash flows. And then what you're doing is you're really reducing, to your part of your question, the strip ratio for a possible resource that possibly could be mined underneath the old mine. So it's really kind of a double, it's kind of a twofer here. You get a lot out of this. I think I answered your question. I hope I did.
Yes. Yeah. Thank you, Gabe.
Thanks. Not a good question from my colleagues. So I'll just have maybe just one as a 2-part, and then pass it over to Campbell. There've been just you know, we've been talking about sort of near-term production. This old sort of the waste. You know, the previous report showed that on the metallurgy and the appendices that there were some, you know, copper recoveries. You know, this news release today showed there was more copper there. I guess when I think of copper, one of the first things that come to mind is acid mine drainage and sort of rainfall impacts on that. So can you maybe just, you know, speak a little bit to, I know it's obviously early, but as you're thinking about production, how you're gonna solve for that?
Thank you for your question. And I'm going to flip back to another slide, but I just want to highlight, because you made reference to it, in our appendix of our corporate presentation, there's a relatively new slide on metallurgy and recovery for those of y'all interested in that topic. But to answer your question, I'm actually going to go back to the figure I was just on a few minutes ago. And here's the really cool thing about this project. So look, there's been acid rock drainage, natural acid rock drainage at Brewer for 550 million years, ever since there was the original mineralizing event. So that's nothing new. Now, it was exacerbated when folks started using dynamite to blast this thing in the mid 1800s, and then particularly the previous operator in the 1980s and 1990s. So in a way, if you look at this pit, by blasting it, the acid rock drainage was exacerbated. But here's the good news. And this is kind of a benefit of the fact that this has been under government control for the past 20 years, is that all of that acid rock drainage is now being collected in one single extraction well, that has a flow rate of about 80 gallons a minute. We've actually assayed that water, and while it does have mercury in it and selenium in it and iron in it and copper in it, it's got gold in it too. It's got a lot of good things in it. But currently the process that's being under the auspices of the government is a waste treatment system that is low risk, very efficient, and they're producing sludge and neutralizing that acid rock drainage situation. So I really don't see it as a problem, but here's kind of the cool part. We've talked before about possibly monetizing the waste in this pit. We've talked before about possibly there being an economic resource in an upper zone of mineralization that we now know is rich in gold and copper right below the old pit. Well, here's the thing that we also think is true, is that if you were to remove the 7 million metric tons of waste here, again, ideally you're monetizing it, you're going to greatly reduce the intensity and the flow rate of that acid rock drainage. You're going to totally reduce the overall sort of risk profile from an acid rock drainage perspective at Brewer, which is the sole reason that it was taken over by the government 20 years ago.
Great. Okay. Thank you. Campbell?
Sure. I think we're getting close to the end of our show. Get some great questions, and you talk really fast, Leighton. So we easily take 10, 15 minutes off our normal programming, but you have a lot to say, and I love the passion and enthusiasm.
And aren't you recording this, Campbell?
Yeah. Oh, this is recorded. So
good. So if I talk too fast, it can be watched again.
Yeah, I know this. Usually people speed up things, but anyway. Want to thank everyone for tuning in. We'll be queuing you for feedback. Please share a few lines. It'll get to Leighton. And the replay will be available in about an hour after we wrap up. You can get an advanced copy of the on-demand at amvestcapital.com/webinars, real simple. And also in the usual social media places and on YouTube in about a week. So with that, thank you, everyone. Thank you, Leighton. Really exciting. Congratulations on the news. Want to see more of it this summer. So
absolutely. Thank you. All for now.
Yeah.
Thank you.